Hey there, Bill Sorian from Pittsburgh, and it's Wednesday evening, 3/7, about 6:23 p.m. So again, we're going to look and see where we could have made money using the New York City Reversal Strategy. Here's the rules posted here on the video for you to see. Give you a second to write them down if you haven't seen them before. But unfortunately, I couldn't take any trades today. Sometimes my job, stops me from being able to take trades. When it's busy, I just can't get to the terminal to get any trades in. But looking at the charts now, I see that the CAD pairs were the winning pairs today using the New York City Reversal. So again, we're looking to take trades between 8 and 11 a.m. No trades after 12, no later than 12. We're looking for the currencies that have already made their move, 3 clear intraday pushes. The ADR was met or exceeded, looking for a W at the bottom, an M at the top, or railroad tracks. Second leg of the M or W should come within 3 pips of the first leg. 3 pips, 4 pips, absolute max. Okay. Enter the trade after close of the candle that forms the second leg of the M or W. Set stop loss 13 pips above or below the high of the first or second leg of the M or W, whichever is greater. And take the trade back to the water or to a max of 35 to 50 pips. 35 pips for the lower ADR pairs under 100 pips a day, 50 pips for the higher ones over 100 pips a day. So let's see what the first one is we could look at here. I think it's going to be GBP-CAD. So we see the Asian session here. It shot right up during the Asian session, came back down, then stayed in the range here. Then it made a move down here. This could be considered a market maker trade, a vector move down. And some people may have taken this trade as a buy right after this quasi railroad track formed right here. Now we're waiting for it to make its move. So we're looking to see the average daily range is 136 pips on GBP-CAD. And this one actually moves up quite a bit to the top, 173 pips. Okay. Now the problem with this one is, remember, you need 3 clear moves, right? 3 clear pushes. So from right here you have 1. Okay. If you come up here now, it's a little bit questionable because you only have 1 candle where it kind of consolidates or pulls back. Okay, so this you really can't count as a second or a third. Okay, so but because of the fact that you have 3 situations like that where it consolidates, I would count that probably as one push, all one push from here up to here, and then again you get the third move up. Now, it's a little bit questionable, so you may not have wanted to take this trade. This trade could have fooled you. You could have said to yourself, oh, 136 pips, let's see here. I can get in right here, right? You could have taken this short right here after the quasi-railroad track, and it could have moved up and stopped you out. Okay, as you see here, up to the top, it would have stopped you out. Okay, but if you wait, and you take the trade up here, then you get the railroad track set up right here, and the entry candle is right here, and you can take this right back to the water for 47 pips less the spread, and it actually drops all the way down to the mayonnaise as well. Okay, so GBP-CAD, that was a good trade there. The CAD pairs were the winner, EUR-CAD right here. So we're going to look 111 average daily range. This one moves 143 pips. You have just about 115 right to here. Kind of not enough. You need to really exceed. It's really better to exceed that average daily range number there. So if you take that up to there, that's 155 pips. You get the railroad tracks right here, the quasi-railroad tracks. It consolidates here. You don't take much heat. And then you get to move 31 pips to the water, less your spread. This one, all the way to the mayonnaise also. Okay, then the other one was USD-CAD. Again, looking for the move up here, 128 pips. It's about 101 right to here, so you'd probably want to wait for it to get up to here. You kind of want it to exceed that average daily range. Okay, I do have written here met or exceeded, but exceeded is always better. Okay, if it's right at the average daily range, it always seems to want to make another move up higher. Now, sometimes you don't get stopped out when that happens, but sometimes you do. So it's always best to wait for it to definitely exceed it by at least 10 pips or more. So here we wait. Like I said, if we wait for it to get up to here, you have the railroad tracks right here. Your entry is right here. Also, you're on this dotted line here, which is yesterday's high. And then you can take this to the water, 39 pips less your spread. And this drops all the way back down, even lower to right where the move was. So those were the three CAD pairs that you could have caught in some pips with today using the New York City reversal technique. So until tomorrow, it's Bill Soriano from Pittsburgh, and let's make it a great day trading Forex.